Good day, everybody, and welcome to episode 45 of my YouTube video series. And today we're going to talk about a report that was issued by Morgan Stanley. Now, Morgan Stanley issued a report that came out on Bloomberg, came out in the media, but I'm not sure how many people actually saw this. But Morgan Stanley basically said that Singapore property prices will drop 3% next year in 2024. Now, I know a lot of you read the headlines, but maybe not into the details. I just so happen managed to get a copy of the Morgan Stanley report. So let's go through what they said in detail, why they say property prices will fall, right? And let's go through the video with me. And as per usual, let's have an introduction of myself.
Director of Outbound Marketing at Ryan
Still in Stanley, Malaysia. So my name is Ryan. Namaste, Ryan.
6,000 incoming supply in Johor. This is
I am writing thank you for attending today's presentation on Stanley, Malaysia.
So my name is Ryan Khoo, and I am a Malaysian. I'm a Singapore PR. I've been based in Singapore for over 10 years now. I'm a property agent. I'm a property investor. I'm most well known for doing articles on property investment, both in Malaysia and Singapore. I have done property investments. I have my own properties in Singapore, Malaysia, especially in JB. I'm also known for doing a lot of investments in JB, and you'll see me write articles for HProp, Property Guru, some events for them as well, ST Property. Yeah, so I've had a quite long track record doing real estate investment in both Singapore and Malaysia. So now today's topic, we're going to cover something that came out in Bloomberg, right, which is actually a report by Morgan Stanley saying that Singapore housing rally is set to end, and they expect home prices to fall 3% next year in 2024. Now, as everybody knows, the Singapore property market has had a very strong rally, right, since the COVID 2020-2021, all the way until now. I think Singapore prices have been pushing very strong. But finally, this year in 2023, I think especially for the last maybe 2 to 3 months, we start to see signs of slowing down, right? I think everything is, a lot of agents have been probably trying to downplay it a bit, blaming other factors such as ghost month or things, or some recalibration in the way what URA sets floor area and things like this, right? A lot of excuses, but I don't go into too much detail about those. But basically, I think if you are an active agent or property agent in Singapore, you've probably seen some signs of the slowing down happening. So some people probably will say it's too early to say that Singapore prices will drop. But I think right now there's probably enough data to say that at very least a flattening, right, of prices. And I think a minor drop is to be expected considering what is coming up. But let's see, like in today's video, let's see what is Morgan Stanley saying about it. And like I said, I have a copy of their actual report over here that talks about it, and let's go through in detail. So this report was written in Singapore, issued on the 8th of November, written by 2 analysts based in Singapore. Now, basically, one of the results that they're saying here, they are downgrading property developers. In this case, they are referring to City Development, CDL, and UOL to underweight round. This is not a stock market video, so I won't cover the stock market portions too much, but we're looking at it from the aspect of a property investment and why Morgan Stanley says that property prices will fall. So basically, Morgan Stanley is saying Singapore has had a historic 7-year rally, property rally. I think one of the longest up cycles since the 1980s. And they have some leading indicators such as vacancy and sales volume pointing that there will be a decline in Singapore prices next year. So some things that they're saying here is foreign buyers deterred by the 60% stamp duties, fewer HDB upgraders entering the market, investors pulling back as rental market softens. Now, the rental market is softening. I think if you are a property agent in Singapore doing rentals, you have probably noticed that it's not so easy like 1-2 years ago. Still not bad. I mean, you can still rent at pretty good prices, but it's not like 1-2 years ago where you get a lot of calls. Maybe I don't know, that's quite clear now if you are in the property industry. On supply side, Singapore government is throwing in lots of supply. I think the Minister of Housing, Minister of Development, Desmond Ng, I think, has said repeatedly that there's a lot of HDBs that are rushing for completion this year all the way until 2025. That will dump a lot of supply in the market, right? And of course, GLS, government land sales, has also been very high, and you can see some signs that land prices are not moving up as much as they should, and some sites are sold cheaper than last year. This is a bit mixed, right? I'll talk about it later, right? Yeah, so this is on their first page. On the second page, basically, this is talking about the property developer share prices, basically that's trading at discounts, and that discount prices haven't factored in that property prices may fall. So I think they are looking, that's why they're putting underweight on these property developers. But yeah, we're not here to talk about the developer share price actually. Okay, so let's go into detail why they say prices are going to go down. So demand declining because number one, foreign buyers, typically 1/3 of the high-end market, they're not likely to come back because of ABSD at 60%. Okay, locals upgrading from HDB, fewer qualify to do so next year. I think what they're referring to here is the number of flats, HDB flats that get MOP, right? Your minimum occupation period 5 years. I think will drop next year, and I think 2025 also drops, right? So that means less HDB upgraders. I think that happens next year as well. And then even so, even if they can sell their HDB at high prices because of higher down payments due to TDSR, as well as more expensive new condos, they may not be able to upgrade that easily, right? Even if you can sell your flat expensive, right, doesn't mean you can the flat that you sell at a good price may not still be enough money to buy the condo that you want to upgrade, right? So this is what they mean by fewer upgraders, right? For property investments, property investors, the value proposition to buy is weaker because harder to borrow, interest rates are high, as well as in high interest rate environment, there's two things here. Number one, if you borrow money to buy property, your mortgage interest rate is high. But the same thing is you might as well let the money stay in the bank because you are getting a good interest rate from the bank anyway. So why take the risk of buying property, right? Some people may choose to buy like treasury bills or things like that, or high yield bonds, right? They give you quite good interest rate return. So why would you buy a property, right? Take that risk when you can leave that money in a more liquid, also high interest rate return, product, right? Which is more liquid, right? So this is what they mean by in a high interest rate environment, buying property becomes not so attractive, right? Supply is swelling. Okay, so stock inventory is going up. I think you can see this in new launches in Singapore. Sales rate not as good as the past 2 years. I mean, if you notice 1-2 years ago during COVID, right, developer can sell 70-80% in first weekend, right, very easily for almost all the projects. Now, not every project is like that. Well, I think the headlines this weekend was Jayden in Jurong East selling 88%. I think less was spoken about Hillock Green in Lentor, which only sold 26-27%. So while one project in Singapore did very well, Jayden did 88%, another project in Singapore, Hillock Green, didn't do so well, only 26%, compared to its prior project there, Lentor, which I think was Lentor Hill Residences, they did about 70%. So this time only 26%. So you can still see some signs of slowing down over there, right? Supply also is showing it in a number of HDB being built, BTO being completed over the next 2 years. Another thing is land prices are also, some selective land prices are selling cheaper, right? We'll talk about that later. So with this demand declining, supply swelling, I think it's quite clear that prices will fall. So basically, Morgan Stanley said we forecast a mild decline of 3%. This will persist for a year or two, okay? But coming down cycle will neither be sharp nor protracted, right, as potential policy easing keeps tail raising chair. So basically, Morgan Stanley only predicts a minor decline of 3%, right, and will only last for 1 or 2 years maximum. So this is a summary page, right? So a minor decline of 3% and only last for a year or two, and will not last that long, right? And basically they're saying that Singapore government has a lot of policy easing tools. That means if they want, Singapore government can relax certain policies to push the market up in case it goes down too much. So yeah, for all those of you who are property owners, right, at least that there is this thing in mind, right? So price declines have been very mild, less than 5% drop in the past 20 years, okay? So we expect 2024 to be similar. So Singapore property prices will only drop 3% according to Morgan Stanley, and this still remains quite elevated if you ask me, considering that we've had a very high increase over the past 2-3 years. Okay, so let's go into a bit detail. Leading indicators, so basically they're saying occupancy dropped a lot in third quarter. You can see, I think this is the light blue line here. So when occupancy drops I think over 2% here, right? In this quarter, right? They expect property prices to fall as well. Developer sales volume has been on decline. Yes, I think you'll know this if you've been monitoring developer sales. They are slower now this year compared to last year. They're also referring to stagnating stock prices. Yeah, there is this saying that if share prices fall, property prices will follow behind, but typically 6 months to 9 months later. So based on their Morgan Stanley regression model, they expect home prices to have a moderate decline in 2024. Okay. So fewer foreign buyers, yeah, with 60% ABSD. I mean, even very rich people, quite difficult for them to pay 60% ABSD. Nobody spend money like that, right? Give free to Singapore government. So, and then foreign buyers, of course, mainly affect the luxury home market, Central Core region of Singapore, CCR. So that's why you can see CCR properties in Singapore like Orchard, Marina Bay, all that have not done as well compared to the other parts of Singapore, right? Because Sentosa Cove, all these places are not doing very well because foreigners are not buying, right? Fewer upgraders. Now, I think this one is explained very well. And maybe next slide, right? Basically, this what they're saying is that next year in 2024 and 2025, I think there are fewer people who are HDB upgraders. That means people who have achieved the 5-year MOP and they want to upgrade to buy a condo. So they're saying nearly half of condo buyers are HDB upgraders, but fewer qualify in 2024. Now, if you look at, I think, yeah, this slide here, right, you can see 2024 and 2025, the number of HDB flats that are turning 5 years, I think dropped. This is in what, thousands. Yeah, this is in thousands. So basically next year in 2024, only 12,000 are getting their MOP. In 2025, only 7,000. Part of it is because of delays due to COVID, right? So this number is dropping. When this number drops, right, means less people are eligible to upgrade, right? So less people are able to buy condo, right? And if this only picks up again in 2026, maybe that's the reason why Morgan Stanley say the decline will only be for 1 or 2 years. Right. Of course, even if they can sell the HDB, sell high, buy high, that's the problem, right? Even if you sell the HDB high, you're also buying high. So you may not want to upgrade. You may not be able to upgrade anyway, because sell high, you still have to buy high, right? It's not that you can sell high and buy cheap, right? That could be a problem, right? So stricter, more down payment required. Financing rules have gotten stricter, and of course, property prices are higher as well. Okay. So interest rate environment not conducive because interest rates are at a high now. So I think you can hear this story also online that interest rates may be higher for longer. That means the new normal could be this kind of rates, 3-4% that we are seeing today. I mean, Singapore has had traditionally 1% mortgage rate for a very, very long time. I think for easily 10, 15 years, right? So we've been so used to the 1% rate. Now this 3 to 4% rate could be here for longer. And when interest rates are high, so mortgage is more expensive, and it's also less conducive for you or less attractive for you to buy property as an investment, right? Because interest rate is too high, so the margin is too low, right? So let me see. Where is that? Yeah, so vacancies elevated. So you can see private residential vacancy spiked from 6% to 8% in Q3, and they expect vacancy to remain elevated for 8% throughout 2024, right? Vacancies remain high. There are a lot of completion of condos this year as well. I think Singapore this year has 8 condos that have over 1,000 units getting TOP this year, right? So this will definitely affect vacancy rates moving into 2024. And what they're saying here, so most of the people, the foreigners or white-collar expatriate employment pass workers have already returned to Singapore, so unlikely to have a very big shoot up after this, right? Most of them they can come back to Singapore, and because of that, rents will decline because rents are at a record high. And yeah, I mean, what that goes up too fast, rents have gone up too fast, too fast, right, in the past 2 years. So unlikely you will have to level off a little bit. Yeah, I agree with that. Rental properties are less attractive, right? Because in those days, right, if you can get 3% rental yield minus 1% mortgage rate, yeah, this is what I mean. In the past 10 years, this was quite normal. 3% rental yield at a 1+ mortgage rate, so you make that 1% difference. But now with 3% rental yield and also 3 to 4% mortgage rate, then you don't have a net positive rental yield. Then why would you buy investment property? So this is also the issue, right? So this is what I mean by vacancies have gone up in this chart over here, right? Feel free to pause on my video if you want to take a look at what Morgan Stanley drew here in detail. Land prices. Now this one is a bit of a mixed news. While some land prices have dropped, I think especially in Lentor, places like Pine Grove, right? We have seen land prices fall on subsequent land prices, but I think we have also seen some land prices go up, like the ones in Toa Payoh went up quite a fair bit. Clementi Avenue 1, right? Land prices have gone up compared to equivalents, previous equivalents, and actually the government is throwing in a lot more land sales. I think before this year end, we will see another, I think 4 to 5 plots being released, which will get results by year end, right? So land supply going up. I suspect property developers are still keen to bid high price for good sites because anyhow they have 5 years. So even if the property market goes into a downturn next year, 2024, 2025, that's only 1 or 2 years. They are hoping to ride through, right, all the way until beyond the downturn, because anyhow they got 5 years, right? But it could mean a favorable period if you're looking at opportunistic buying, right? Next year, right? Although this year you're looking at a lot of new launches at over 2,000 per square foot, right? Maybe you can get something a little bit cheaper next year, but again you have a very small window of doing this next year only, because next year 2024, maybe 2025, right? Because beyond that, I think then conditions will be better again for the property developers. Yeah, but land supply is rising, land prices going down, but not everywhere, right? Land costs are falling off. Yeah, only in Lentor, Katong, in the Tanjung Katong area, there was a couple of land plots also dropped a little bit, but dropped, yeah, on average 10% lower. Not very, very much, right? Anyhow, land cost is only about maybe half of development cost. So this 10% doesn't actually translate to 10% price drop, right? So yeah, right, you can see the average land per square foot has been dropping a little bit so far in 2023. So are prices in for structural decline? Now, this is the big question. Some of you are hoping that Singapore prices will drop a lot, right? I think, like what Morgan Stanley said here, they're only going to drop 3%. That only for 2024, 2025 now. This is a cyclical downturn, not structural, right? Cyclical. Because ultimately, I think we still believe Singapore to be a first world city, first class city, where overall as a country, Singapore is doing very well, AAA grade country, right? So downturn here is cyclical. When we say cyclical, what we're referring to is because in the past 2-3 years, Singapore prices have moved up too fast, too much, right? Too much, too fast in the past 2-3 years. So there's an overshooting a little bit where we're here for a minor down cycle for the next 1-2 years, right? 3% only for next 1-2 years. So what does it mean to you as a buyer? Like I said, if you have an opportunity to buy in the next 2 years, there's probably a chance for a little bit of opportunistic buying, but again, not by much, right? But yeah, it may be a chance for you to hunt a little bit. If you're lucky, you may get something a little bit cheaper than 3% cheaper, but yeah, better than nothing. Why a lot of developers probably will not really care too much, because this is again a temporary situation, a cyclical downturn, and so far, Singapore cyclical downturns are quite minimal. And again, the government got a lot of room to remove cooling measures if they want to push up prices again, right? So all in all, I think Singapore long term is still a very good place to hold real estate, right? And yeah, which is what I would still recommend. Like what I tell people, everybody, if you still have unfulfilled Singapore property quota, still buy Singapore first if you can afford it, right? Before you look at other choices, right? Next year or 2025 could be an opportunity to do so. So I want to add on a couple of things as well. Recently during National Day, I think government spoke a lot about the new Prime Plus standard model for BTOs, right? I think the key measure here is that Plus and Prime will have a 10-year MOP. Now, something about 10-year MOP that I think a lot of people have not really understood is that when you have a 10-year MOP, means now you build a HDB, maybe is 3 years, 4 years, 5 years, right? So plus another 10-year MOP, you're looking at 13 to 15 years later before you can sell, you know. So what that will mean, actually in the next 6 or 7 years or so, there will be again a situation where not enough HDB upgrader, because all your Prime and Plus, they cannot upgrade because they're still bound by MOP. So only the standard, which are all the HDB or the BTO in the more remote area of Singapore, only they can upgrade because they're MOP 5 years still, right? But for everybody who's Prime and Plus, they cannot upgrade, you know. So in that situation again, you have another 6-7 years from now where there'll be again fewer HDB upgraders, right? And we may move to a norm where eventually everybody has 10-year MOP, you know, or majority or a lot of people have 10-year MOP, because primarily a lot of places are now prime and plus. I mean, it's not difficult to be in a prime or plus location moving forward with a 10-year MOP. So when this happens, I mean, government is trying to reduce the windfall or lottery effect of BTO, because you know, a lot of people make money when you sell your BTO. So I think government trying to reduce this effect by putting in a 10-year MOP, right? So when this happens, right, so there'll be a situation where it's difficult to upgrade from HDB in the future, right? And I think some people have gone as far as to say that future private property owner will be also private property owner. That means private property sell to buy another private property, because only they have the kind of equity or money or value in their property to be able to buy private property. Because next time your prime plus by the time they want to buy private property, they have to wait 10-15 years. Don't know whether they still can or cannot, right? Because yeah, you know, because of the 10-year MOP stretches, and it changes the equation a lot, right? We don't really fully understand how much this will affect the market, but for sure, I think there'll be again some flattening of prices. This flattening of prices over the long term. This thing, right? 10-year MOP will actually flatten prices over the long term. And this is my feel, right? My 2 cents, and eventually you may see a lot more common 10-year MOP BTO, right? They may become a majority instead of 5-year MOP, right? Recent GLS prices. So recently we had 3, I think Toa Payoh 1, Clementi 1, and Pine Grove. So Toa Payoh and Clementi prices were very high. I think they were good sites, right? So developer bid very aggressively for the good sites. Although fewer people bid, maybe that's one negative to look at it. Fewer people bid, but the prices still were quite high. And Pine Grove, the price actually fell, right? Compared to the earlier Pine Grove site. So you can see there's a mixed bag here, like what Morgan Stanley is saying. In some less desirable locations, or some locations where there's a lot of supply, I think you can see land price falling, right? But if an area or the land site is still quite good, right, people will still bid for it and bid high price, right? So even like Jaden, right, which was launched over the weekend, 88% sales over one weekend, very good, right? But that's a super prime site, so you can see people willing to pay high price for a good site, right? But Hillock Green, right, in Lentor, not as good a site in a sense, or because maybe a lot of sites coming up there, so people not willing to pay so much, only 27%. So you can see this happening in Singapore. People only willing to pay money for good one. Not so good one, they rather not buy, right? So there's this divergence in GLS, and why we see GLS price will sort of moderate again moving forward as well. So again, Singapore property prices long term, like what I want to reinforce here. Out there, you may see a lot of people saying that, hey, Singapore prices are going to fall next year, but it's a cyclical thing. It's not structural. I think it's important to understand that. And I think long-term Singapore is ultimately a very good place to be. I mean, I just watched some videos, some documentaries about incomes, right, in Taiwan, in Japan, in China, and you'll be very surprised. And I think a lot of people in Singapore still don't appreciate this as much, that Singapore is ultimately still a very good place to be, right? Even graduate income here is still very high. Although cost of living in Singapore is high, yeah, but sure, everybody is suffering from the same problem. It's a global problem, not just Singapore, Malaysia as well. Any other country in the world, I think everybody is suffering from high inflation and high cost of living. But I think Singapore is still the best place to be, right, compared to many other locations. And I think due to that, right, structurally Singapore is very sound, right, and Singapore will still remain a choice place for many years and decades to come, and that will keep Singapore property prices here high. So as what I always recommend to people, whether you are Malaysian or Singaporean, try to keep some portion of your money, of your wealth in Singapore real estate. I think that cannot go wrong, right? As we move into a more urbanized city in the future, wealth will be concentrated in the high urbanized talent wealth locations, and Singapore is definitely one of them, especially for Asia, right? And in that sense, your property value will remain, will do here very well for the years to come, right? If you have some spare money, then you look at some other alternatives, right? Yeah, and that's why I'm also a proponent for Johor in the sense, because Johor is effectively a proxy of Singapore property prices, right? Which is why I like to buy JB as well, because you may not be able to afford to buy Singapore, or restrictions stop you from buying Singapore, or at least buy too many. But you can always park your money in JB as a proxy to Singapore. Because JB is a spillover effect of Singapore property, right? Of Singapore economy, right, so to speak. So I hope you guys enjoyed seeing this report by Morgan Stanley, right? And do feel free to pause and watch it in a bit. If you guys actually want the full report and find that I didn't do in detail, do contact me at 81261626. I'll privately WhatsApp you the the Morgan Stanley report for you to read at your own leisure, right? It's important to see that, and it's actually healthy for Singapore market to have this minor correction, I think, because obviously anything that happened in the past 2-3 years is really too much too fast. I think a minor correction for Singapore next 1-2 years is actually a good thing, right? And we all want to be in a market where there's some control, at least over going up or going down, right? Prices are. So if you enjoy our content, do subscribe to my YouTube channel. You can scan the QR code here to join our mailing list. Feel free to contact me at 81261626 to talk about Singapore real estate or Malaysia real estate. And if you need any comments or questions, feel free to comment below. Thank you for watching this YouTube channel. We've had very good response recently. Do subscribe and share with your friends. Thank you very much, and bye-bye.